Hello and good morning, listeners. Welcome back to Almus Market Mornings with Jayaram Krishnamurthy, your daily brew of financial market updates in such uncertain times. Now, JK, we've been hearing a lot on the rate cut pressure by Trump for the Fed Chair Powell, and these attacks seem to have found further escalation yesterday, to which the markets have reacted quite interestingly, with S&P, Dow Jones, and others falling more than 2% overnight. On the other hand, we have also heard from the Indian authorities that India imposes a 12% temporary tariff to safeguard the duty on steel imports. Now, such are the kind of updates which are going on in the market. JK, what do you think, and what should we be making out for these particular updates?
Uh, Good morning, Shikhar. Dollar has become the focal point of the markets now. Um, you know, uh, Yesterday it took a step lower, hitting another three-year low at 97.90 before a very small bounce. And the latest fall has been triggered by President Trump again criticizing Federal Reserve Chairman Powell for not lowering interest rates quickly enough. And now that is leading to speculation about future role of Powell. And after his critical remarks on Friday, and they repeated on Monday, markets are now incredibly nervous about the consequences that a Trump loyalist being installed. And a lack of independent central bank is something that erodes the confidence of the global investor. So that has led to U.S. Asset sell-off, U.S. Dollar sell-off yesterday, which doesn't seem to be nearing any sort of a reversal, and it is in fact spread to the most. Initially, we had the major rally in the euro, but now it is spread to the other DM currencies and the EM currencies as well. A general tendency to get out of the U.S. sets and also the U.S. dollar is seen. Now, why we are seeing such a huge move in the USD? Let's look at it. When Trump got elected in November, we saw a rally in the dollar of 6.5%, a major mandate to him. And the market look forward to tax cuts, reforms, all that supporting the U.S. markets. But then, after his takeover and when the tariff talks started and got intensified, and then the reciprocal tariffs, all that, and market realized that apart from the measures to cut down on expenditure and then retrenchments and all that, then I think these were not taken well by the global investors at least. A sense of slowdown in the U.S. economy being imminent has led to the asset markets initially sell off, and now the latest developments, of course, have led to more erosion in the confidence of the uh, general investors in the US asset. So, as I said, uh, Trump's election led to 6.5% rally in the dollar, and since these tensions began, from late February till now, dollars actually lost nearly 12%. So that is a massive reversal of the dollar long positions that is happening. And what is also happening is that in a very broad picture, the dollar has risen for almost 14 years from 2011, and the huge structural long position in the market because of the US exceptionalism that has been in force for quite some time, and the safe haven status. All this, market is heavily positioned in the dollar on a structural basis, and now suddenly that is getting eroded. And that is the reason why we are seeing no let up in the dollar selling that is happening. Of course, while traditional observers and the chart observers do feel that it is bit extended, but these corrections can be more in terms of time than in terms of price, which is purely because of the positioning in the market. And that is what I feel. So maybe the currencies which are moved too much, like euro, might take a pause, and other currencies can take the lead. And even EM currencies, apart from yuan, of course, which is completely controlled by the Chinese authorities, other currencies have also gained. INR too traded a new low in this cycle. Of course, March we had, so in the month early April we had seen 84.95. Yesterday we touched 85.05, around 30 paisa gain from the previous day close. But we did see RBI stepping in for a change, and keeping the dollar steady above 85 throughout the day. And that probably is par for the course, at least for now, because while the uncertainty rules regarding the tariffs and the global trade, as you mentioned, India itself is getting into some act on the trade barriers, because as I hinted yesterday in my update, the dumping of Chinese cheap goods is very likely if their exports to the major market of US is affected. So that is the reason why India is also taking its own defensive measures. And on the rupee also, yes, because of the uncertainty on the export side, we cannot have a very strong rupee in a very short period of time. Yes, eventually we will move along with the dollar index. If dollar index falls to 95, dollar could also go to 84, but that is in a gradual way, and we cannot have it drop in a very swift manner to lower levels. So that is the reason why I would call this as a smoothing operations from the RBI. Otherwise, if you look at the stock market rally, India, which has gained more than 10% in just under a fortnight, and FI flows have also turned positive, although it's still overall negative for the month of April, but it has eroded most of the negative flows that were seen earlier. So that is the status of the dollar. I think the dollar bearishness is here to stay for some time. Could be shifting from one currency pair to another, but overall, the bearishness is very likely to persist. And of course, what statements emerge from the US side is also important, because we have yesterday the rally in the yields in long bonds, that is 30-year and the 10-year, both saw the yields going up by 8 to 10 points. So are we seeing another bond market tensions? That's another thing that the market will be looking forward to. So there's no dearth of negative news in the market. Only good thing is that investors, or whatever money they're taking out from US, they are trying to invest in other markets, and India has definitely benefited out of it. And in this scenario, the the economic data has been pushed to the background. Yesterday, in fact, we had the conference board's leading economic indicators that showed another drop from the previous month. And in fact, the conference board says that March decline was concentrated due to the consumer expectations dropping further, stock prices recording their largest monthly decline, and new orders in manufacturing softening also. And the board also revises the US GDP forecast for 2025 to 1.6%. So that is, normally market would take these also in their stride, but in this current bearish scenario, I mean, that's also added to the, further sell-off in the US assets and in the dollar. Of course, we also have, I mean, if markets are not observed, we also have the ongoing results from important companies in the US for the quarter one, Google, and then the Boeing, also the Tesla. These are the big numbers that are being looked at, but I think people will look at it with a bearish eye. Now, let's also be present to the fact that Nasdaq is now back in bearish territory, that is below 80% from the peak. Now, initially, we did have a drop below 80%, and then after the 90-day pause was announced, it recovered swiftly, but again back in the bearish territory, and that is not a good news. So might well continue. S&P, of course, is holding above the bearish territory, but overall, I think not only the intent and the tendency of the market to reduce their exposure to the US, but also the fact that for long we have been talking about how the Mag 7 have been overvalued, and they need to come down to earthy valuations, and that is probably now happening with all these developments. Yes, I think dollar will continue to sell, but pauses will be there. I think unless there is a big positive development from the US, but market is not counting on it, and continues to be on the defensive side as far as the dollar is concerned. Thank you.
Okay, JK, that was really good and quite good in detail. Yes, folks, we've been seeing some sort of sentiment changing, but at the same time, as JK mentioned, there were structural long positions and the US exceptionalism, which has now come into question with the latest set of updates, with the latest set of comments and everything. We are also seeing a good earnings update coming up, which is also adding on to this particular set of corrections. And as JK mentioned, Nasdaq is already in the bearish territory while S&P just hovers around the same. But the realignment of the valuation can be observed. And while the realignment is happening, there is a lot of other actions that we can observe. But more prominently from the US front, it is the lack of independent central bank sentiment which can further erode the confidence of the investors. So that's one key update which the market participants are constantly tracking as to the updates from the US president on the Fed chair position. At the same time, yes, we've seen good strength is now being corrected, and euro and other currencies have rallied. But this particular rally or the weakness of dollar index was initially being seen more prominent in euro and gold, which is now spreading to rest of the spaces, rest of the currencies. We've also seen the USD INR coming down or the Indian currency appreciating, to which there was some sort of a smoothing operation being observed by the Indian Central Bank to not just let go of the movement on the downside in a unidirectional fashion, but some sort of semblance to it. At the same time, we have also seen some bit of FII flows turning positive and a good recovery in the Indian equity markets. So there's a lot of things happening around, and there's a lot of updates. There's no dearth of news in the market, as JK mentioned, which has also pushed the economic set of updates in the background. So that's something which keeps us on toes with respect to the financial markets, and also keen to provide further more updates as to how things are going ahead. That's it for today, folks. We shall come back again tomorrow with another round of updates. Thank you so much for listening.